Hey, VV Nation, Glenn Tompkins here, senior instructor here on our YouTube channel. Always love bringing these videos to you, and this is our newest 6 p.m. video. So, brand new to the channel, don't forget to hit the subscribe button. If you like the content, and today's content is going to be really about a conversation that we all need to have. If you like the conversation, don't forget to hit the like button. And of course, share this video content with people that you know. So the question is, has inflation peaked? I'm not going to give my opinion. I am going to let the data speak for itself, but we're going to look at both sides of the fence. Some people think it has, some people think it hasn't. Some people think that we've got a lot more downside to go. Some people think that this is the promised land right now, that this has been a tough year and the market's getting ready to go up. I do want to push back to Patrick's video yesterday. Did a great job in anticipation of the PPI number that came out today and how to prepare for it, and gave you 4 ways or 4 stocks for ETFs to stay on board with in either direction. So I think it was a great video. You guys liked it. A lot of viewership on that video. If you haven't watched it yet, please go back and take a look. So this is going to be conversational, as if we're all sitting at a round table with our favorite beverage, whether it be alcoholic or non-alcoholic. This is just the time where we're going to sit down and just talk to each other, because this is a big question. So let's start off with some news articles that I have. Starting off here, the October PPI adds relief over cooling U.S. inflation. And I think that, again, people are looking for this because the market has been beaten down. Inflation has been high. Interest rates are rising to overcome that, and this brings some relief. So CPI number came in better, the PPI number came in better, but once we look at those things, are they really better? Well, let's take a look at the analysis. So that's one story. Next story, stocks jump on the signs of lower inflation. That makes sense. So if CPI and PPI are both going down, which are inflationary numbers, then maybe the Fed's, what they're doing with the raising of the interest rates is good. It's really going after inflation, and maybe the Fed needs to turn around and stop doing what it's doing. Slow down, because the Fed keeps saying that the number one priority is inflation, and they're going to do whatever they need to do to overcome it. Does that mean overshooting? Does that mean putting us into deeper hurt than we need to be? Maybe. But let's talk about this. A Fed official warns inflation fight has ways to go. Now, that's coming from the Fed people, all right? The Fed has said that I think that it's not prudent right now to think about pausing or bringing down the interest rates at the present time. And I think he's got a lot more board members on board with him than not. Let's talk about the other side of the fence. Inflation set to leap to a 40-year high after eye-watering energy bills, and that was just done today, the 15th. So people do have their mind set on that we're going to keep going higher in inflation. Who else says that? Morgan Stanley expects the S&P to plunge another 15 to 25% within the next 4 months, and then they've got some top 3 recession-proof resistant stocks for protection. All of this brings me back to one question. Has inflation peaked? And what this October CPI number says. Something that caught my attention here. Unfortunately, Fed leaders believe traders may be ahead of the curve, hinting at future rates hikes still to come. So it comes from the Fed. What does the Fed say? And again, if you go back and listen to what Jerome Powell has said, inflation is his top story, that the rate of inflation is unacceptable, and that he's going to cause the economy some pain. So both sides of the fence, the euphoria side, hey, rah, 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 we got to go. And then we've got the stories that say that, no, it's going to be deeper and it's just going to be worse. But the Fed is trying to walk the tightrope without breaking the economy. Causing the economy pain is one thing, but breaking the economy is another whole thing. At VectorVest, we have a way of analyzing this kind of data. If you look at this chart, I'm looking at a chart of 25 years worth of data. Yes, we were at 40-year, in this case, 40-year high inflation. What did we do? We raised the interest rates to go after it. All right. The last time we had high inflation was back in 2008. All right. And what did the Fed do? They continued to drop interest rates, and look at that fall. But if you look over the whole 35 years that I have here, or 25 years that I have here, what do you see? You see the interest rates are still low, almost at historic lows, right? Yes, we've started raising the interest rates, but if you look back 25 years, interest rates are still overall low, even though everybody's complaining that you got to stop raising the interest rates because you're hurting the economy. We're still at lows. Now, let's look at a tighter time period. Here's the last year. Has inflation peaked? Well, based on CPI and looking at this graph, actually it looks like it possibly has peaked. What, off of that high back in August of this year? What are we doing? We're trickling down. What are interest rates doing? To go after the 40-year highs on inflation, interest rates are rising. But look at this, starting to pull back as well. So now, when we look at the whole picture, I want somebody else to understand. A lot of people says we're in a bear market. We have never designated this as a bear market. Why? Well, let's go look at our earnings trend indicator. The earnings trend indicator looks at the earnings per share on the S&P 500. And we put it on a scaling between 0 and 2, which makes it really easy to understand if we're in a bull or bear market. As long as the earnings trend indicator is above the value of 1, we're still in a bull market. Let's put this on a 5-year graph. The last time we were in that bear market was back in 2020 when the earnings trend indicator dropped below the value of 1. Even with all of this move to the downside on the market, we have never designated this a bear market. And a lot of people think that we're crazy. And we sit back and we go, the data is the data. What makes a bull market a bull market? Earnings. Earnings drives a market higher. Earnings have been falling, don't get me wrong, but still above the value of 1, still keeping us in a bull market, but we're in a bona fide bear run. There's no getting around it. So with all of that being said, look at the difference between the 2-note sitting at 3.82 and inflation sitting at 7.70. I think that the overall overarching idea here is that for us to say that inflation is under control, the terminal rate on interest rates needs to go a little higher. And that's still going to cause the economy pain, but hopefully not to a point where it breaks the economy. I do not think that we're at an economy that's broken, but the data is giving us the hint here that we still have some ways to go. You saw in that other story that the Fed still has some room to go to raise interest rates higher. In this case, they're willing to overshoot to make sure that they accomplish the goal rather than falling short and letting inflation run even higher. All right, so putting all of this together, let's go to a market timing graph. What do I have to tell you? I have to tell you that right now, the market's giving you the ability to make money to the upside. We have a swing high here at 56.92 on our VectorVest composite. We could get a possible confirmed up call today. There's the opportunities for you to make money. But when you look at the whole idea, has inflation peaked? It looks like on that graph, that market timing graph, that possibly we have. And now it's all up to the Fed to determine what they want or what they don't want to do going forward. Folks, again, this was a conversational video. I'm not giving you any stocks to take a look at. I want you to take the data and process it. And if the euphoria is there and the market is to move higher, keep in mind that the Fed still has some room to go to its terminal rate to raise interest rates, which will still cause some pain on the economy, but hopefully not to the point of breaking it. All right. If you like the video that you just saw today, comment. Give me your comments. What do you feel about the market? And has inflation peaked? Number 2, share this video. I want more and more people to see what we're doing here at VectorVest. Folks, this video is over. And until the next time, see ya. Hey, VV Nation, Glenn Tompkins here. And guess what? Everyone loves a deal. So here at VectorVest, we're offering you our Black Friday deal right now from November 14th through to November 26th. It's a 99-cent trial to the VectorVest software. So what do you get for that? You get a 30-day risk-free trial to the VectorVest system. You can have scans to find the best stocks for you, how you invest in the market. We're going to show you how to time the market. That's right, time the market. You have access to over 18,000 stocks globally. We're going to give you free training, and the best news of it all, it's a money-back guarantee. You need to go to www.vectorvest.com/99 to take advantage of this Black Friday special, and you want to do it now.